following is a presentation of TFNN.
Let's go to David from Clearwater.
Hey, Steve, thank you for taking my call on this one, and to pass a compliment to you. Taking a lot of classes from Tom since I became a Tiger back in 2009, and they were always phenomenal classes, and last Friday was my first class with you. And just want to say, Steve, fantastic. You were well prepared. The material was excellent. It was timely. It was a really, really, really good class, and you kind of opened my eyes to a few things that have enabled me to use your terminology. Take massive action.
Hey, there you go. I love it.
Live at TFNN, The Trader's Edge, with your host, Steve Rhodes.
And he's picked out a landing spot that is a good 25 feet above the hull.
There's a good chance he doesn't get this inside the Marco's ball.
Well, here it comes. Oh, my goodness. Have you seen anything like that? This guy's pretty good.
Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the February 7th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today, folks. And my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool I call Treat Your Body Like a Temple. You know, ancient scripture says, treat your body like a temple. And this is excellent advice. Question, do you treat your body like a temple? Something that you take extremely good care of? Or do you treat your body like a woodshed? Here's the thing. The mind and the body work together. We've got to have both functioning well. Our body is the support system for our mind and our spirit. Our body supports us with strength, with power, and the vitality to take us to where it is we want to go. Do you want more out of life, folks? I know I do. And it's time to take better care of our bodies out there. Time to take better care of our temples. Now, the cool thing is we only need 30 to 60 minutes each day in order to have a strong, healthy body. A few simple things will go a long way. For example, take the stairs instead of the elevator. How about when looking for a parking space, don't look for the one that's at the front door. Look for the one that's at the end of the parking lot. By the way, there's a whole lot less competition for those spaces at the end of the parking lot than the ones that are up towards the front of the door. If you don't like to jog, well, just walk. If you don't like to walk, how about a little swim? And if you don't like either of those, maybe just take up a sport, play tennis. Or if you like golf, have your buddy drive the cart, haul your clubs, and you just simply walk the course, or at least walk at least half of the course. It's all about strength of our muscles, folks, and the muscle of the mind needs the muscle of our body. Treat your body like a temple, and it'll be a beautiful thing. Let's go take a look at these markets right now. We've got the Dow futures just popped here a little bit, up about 12 points. The S&P up 2.5, trading out at 1509.50. NASDAQ futures up 10, trading out at 2747. Our call-in number is 877-927-6648. The euro pulling back here this morning. ECB leaving the rates unchanged. Got the euro down about 56 ticks right now. Japanese yen up about 19 ticks. Not really much going on out there. Gold down 70 cents out at 1678 right now. You've got silver off about, really about 2 cents out at 31.86. Light sweet crude up 50 cents, trading out at 97.10. Across the pond, we've got the DAX. The DAX in Germany just had a little pop in it. It's up 71 points right now, trading out at 76.52. The FTSE off 14. Again, our call number, and would love to hear from you, is 877-927-6648. Let's begin just simply by taking a look at the ES Mini at the 10-minute chart that we have out here. That's what we've got on our screen if you are following us on Tiger TV. Maybe you're listening in on your radio. Maybe you're listening on your mobile device at tfnn.mobi. Don't forget this show and all the shows here for 9 hours a day at TFNN, really 24 hours a day. They stream live to you. Just simply go over to the homepage at tfnn.com, and on your smartphone, you'll see over on the right-hand side, you'll see 3 little smartphones. If you click on that, this show will stream live to you. You can always, as well, get the archive of this show on Channel 9. And what we're looking at, you'll be able to follow along with us. You'll be able to take a look at the screens here right now. What we have up on our chart is the 10-minute chart of the ES Mini, the S&P futures contract. What we know, no different really than yesterday. Consider this, you had a pretty much unchanged market yesterday. We had the Dow that finished up, I don't even have that here, but the S&P finished up 80 cents, and NASDAQ was down $3. So basically a flat, unchanged market. And that means yesterday, as we pointed out, got this black horizontal line going across the screen here. That is the line of resistance. It's really at about the 1511 area. Right now, trading out at 1510. The bottom of the range is right down here at about, well, if I switch over to the 30-minute chart, I think I'll do that. That's that hammer candle that we're paying attention to. That's at the price point of 1491.25 out there. So that is support. Haven't been down there since the market moved down on the 4th of February right now, just trying to hang out at the tops, trying to bust it out, has not been able to bust it out. In fact, if I go back and forth either between the 10-minute and the 30-minute chart here, in fact, I'll go back to the 10-minute since that is where we started. What you can see here, just simply using a simple set of indicators out there, one called the relative strength, or what I'll call relative weakness when it's down towards the bottom indicator. This is an easy thing to be able to add to any charting package that you have out there. And also, if you'd like to understand how to use this, go to the homepage at tfnn.com. Over under the on the left-hand side, you will see an area that says free special report, reading the message of the markets, and it's an extraordinary set of indicators. I'll teach you how to use this. I want to be able to teach you how to use these to add to your trading level. What we can see here is as price moves up towards the upper range, that's 70 or above, you start getting into overbought or extreme overbought territory. We can take a look, in fact, at the ES Mini on the 10-minute chart as it was up at the level of 1511 at 6 in the morning this morning. You can see getting into overbought territory. What did it have to do? It's got to work that off. And the way that it digests that, just as it exercises its tempo, it just simply either moves sideways or pulls back. That's what it did coming into the 8:40 a.m. hour, just simply pulled back, relieved that overbought condition. Same thing, folks. If you're looking and you're trying to understand where it is that you want to buy, it's really simple. You want to buy any market, any equity, any ETF, any currency, anything out there, your better places to be able to buy from is when this indicator is down towards the bottom. That's 30 or below. Now, it's a little bit more than that. And what I'm going to be teaching in a 60-minute workshop on February the 20th, so that's going to be 2 weeks from yesterday. That's for everybody that is a client, is a subscriber, and you can test drive, if you will, my newsletter service. You can try it. It comes with a 30-day unconditional money-back guarantee, so take a look at it like this. Even if you didn't want to continue with the services, you can have access to this workshop, 60-minute workshop, for free. All you have to do is just simply put down a little deposit out there. In fact, you can time it with your credit card so that there's no out-of-pocket cost whatsoever. Gives you access to the newsletter for at least 30 days if you want, but access to this workshop. And it doesn't matter what level of skill you're at, you want to be able to use these tools. And I'm going to teach you those tools. I'm going to teach you how to spot and identify divergence out there. And the workshop will be archived on your members page for as long as you are, or at least for 30 days. Out there. So let's go take a look at, let's switch over now. We've been looking at the 10-minute and briefly looked at the 30-minute, but let's go take a look at the daily chart here, because obviously larger time frames give us a better overall view of what is going on out here. Now, on the daily chart, what you're looking at is you're looking at a leading indicator pattern, really, and this is called a butterfly pattern. Why is it a leading indicator? Because you draw these patterns in advance. So you are not waiting around. We can draw Gartley patterns and butterfly patterns on most any chart. And one of the things that it has to have is needs to have a X point. X marks the spot, just as if you were looking for treasure. And an X point is nothing more than a swing point. A swing point here, in the case of the ES Mini, is going to be the September 14th swing point. That is X marks the spot. In fact, if you were watching us in the Tiger's Den, that's where our charts are in HD. So if you'd like to see these charts in HD, just go to the homepage at tfnn.com, join the Tiger's Den. You can do that for free for 30 days, and you'll see that is marked as X. That is the X point. Now, that X point in essence, becomes the swing point that we're going to measure an expansion from. So it's a September 14th high all the way down to the low that was put in on November 16th. That begins our A point. And every Gartley or every butterfly has an A to B equals CD. Sometimes they're a little complex. Sometimes they're in that C to D leg. In this case here, that's not the case. The A point is that November 16th low. The B point happens to be the swing point where the market moves up and then comes back. That is December 19th. Makes a high out there of 1446. Pulls back, does what? Does one of those sweet 618 retracements. Just like when you come to visit us at TFNN here in beautiful Clearwater, you would be visiting us at Suite 618. How did that work out? In any event, comes down into that December 31st low. That gives you your C point, A to B equals CD. Completes right about up in the time frame of January 29th, right at around that 1505-ish level. So we have a butterfly, and that is a leading indicator, and you could draw that in advance. You can do that on anything it is that you trade. Now, as we take a look, and these, folks, they're leading indicators as well as identifying where things get stretched and where you start to see reversals. Now, what we also know is the market on the daily chart had moved into what? Moved into overbought territory. Well, now let's go read the message of the market and take a look at the candles that are out here. Because one of the beauties of this pattern here is if it fails, we know approximately where it's going to go. But let's come back to that. Let's first take a look at by reading the message of the markets, what the bulls and bears are telling us, because this is a market about just simply understanding what those signals are. So as this pattern was completed, as it was being formed, we had a bearish candle. We had a bearish engulfing candle. That is where the body of the candle engulfs the prior session. Only can happen at highs. That is what took place on January 30th. Takes place on January 30th. That's the first time the bears really showed up. They were, came out of the woodwork, if you will, and you had the bulls try to push back into them as the market moved up into Jobs Friday, February 1st out there. Then what happens on the Monday session here? Another bearish engulfing candle. So we've got a leading indicator pattern. We're up here towards the overbought condition. Of course, it is just moving sideways, so it is working off that overbought condition. You can see that here on the bottom portion of the chart. But this area, which we'll call right around the 1511 area, that would be the high of February 5th out here, this becomes a resistance point. And what's cool about this, either bullish or bearish, is the line is really clear. It is truly drawn in the sand. And if this area gets broken, where will price travel to? Well, it'll go up to that next Fibonacci expansion level. That is 1.618. That would take you up into the 1546 level. What has it got to do? It's got to close probably above 15, I would say 1520. Closes above 1520 on the ES Mini. 1547-ish is your target range. However, what is more likely to occur out here with this area, with this strong resistance area, we're likely to see a pullback, and that pullback at a minimum coming down into the 1445. That's your 0.382 retracement, but more likely into that December 31st candle. Whether that's the high to close the gap, and on the ES Mini, that's 1425 and change, or 1405.58. That is your daily lesson on the ES Mini. Expansion, contraction. Give us a call, folks. We'd love to hear from you. 877-927-6648.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Welcome back, folks. And, Thursdays, that music and everything in the background and the opening is, it's all about golf because it's when the PGA Tour always kicks off their opening day. And this week they are out at Pebble Beach. So even if you're not a golfer, just simply some fabulous views out there. You should turn it on and watch it. But let's come back to the Dow futures here real quickly as we take a look at reading the message of the markets in the Dow futures. The Dow also making that 1.272 butterfly. That pattern really completing here on the 1st of February, Jobs Friday, when it closed up at that 13,962. Now, that following session, which is referred to as a dark cloud cover candle, that's where the bears came out, really never should have happened out there after that candle. Maybe a sideways move closing up towards the top, and so that is a bearish leading indication out there. Obviously had a reversal a couple days ago. Now what we've had the past, let's take a look at yesterday's candle, really what's referred to as a high wave or a doji candle. They have more meaning at areas of resistance, and that's where it's at. That is where the Dow is at, and today, right now, you're just taking a look at a doji candle, but it's early in the trading session. Let's go to New Jersey. Let's go to Victor from New Jersey. Victor, thanks for calling. Thanks for holding. How are you this morning?
Good. How's it going?
Good. Now you guys going to get some snow up there?
Yeah. Oh, yeah.
We're talking about a foot or so, or is that not in your area?
Not Jersey. Nah.
No. You wanted to take a look at a couple stocks. One is Clean Energy, CLNE. Tell us what you're doing and how we can help you.
Well, I'm just looking at it as a good buy. Clean, and then I'm looking at POM and PEG.
So
I
if we
just
take
want
a
to know,
look at-
am I too early, or should I be sitting back waiting for this anticipated correction that'll probably never happen because the government controls everything?
Well, so if you want to go with that philosophy, let's take a look at clean energy. CLNE is the ticker symbol. And if we take a look at the the December 31st candle, that is a high there of 1247, 1.5 million shares. So that is where this broke out. So this is pulled back into the breakout area. It's also telling you one of the things that it's at least telling me is as this has pulled back, it's pulled back where it's not as strong as the market. So here's a stock that's already back into the December 31st area, and what I expect that we'll see the market also pull back into that gap. But as we take a look at how this is coming in here, you want to benchmark this off of the volume from December 31st, that open window, that open gap up there, and that is at 1247. Now, if we take a look at yesterday's action, pulled back with 1.2 million shares. So 1.2 coming to 1.5, that's not bad. What you're really benchmarking it against is the 2.6 million shares from the gap up of January 2nd. So really not too bad. And yesterday's candle out here on CLNE, folks, if you are following along on the home game here, what you are seeing is a little bullish engulfing candle out there. So you've got a reversal. What I would be doing, and you're also coming from the bottom of the relative strength indicator out here. So this is not a bad setup. Here's what I don't like about it is that we can see as this equity got up into that 200-day exponential moving average, sort of acted as a magnet in the repellent area. Now you've got it trading continuously underneath the 9-period EMA out there. And so what that is also giving an indication of is that is an area of resistance. What I would do, Victor, is I would wait to see how today trades out in this equity before pulling a trigger on this, especially because you're right. What you want to do is you want to try to line this up with the actual market out here, but not really bad looking from the standpoint of the pullback. Let's quickly go over and take a look at POM, which is Pepco Holdings for you as well. Pepco Holdings closed out at 1960. Now, the buy on this may have been, well, I tell you what I would do. I would not pull the trigger on this here. I would wait for this to come back and test out the low from January 11th out there. Only 6.2 million shares, but right now, if you take a look at this equity, all that it's doing, Victor, it's going into the downdraft from January 10th that has 11.5 million shares. That is institutional selling, and that one sticks out, like it just sticks out so large that I wouldn't want to be taking a look at this clean. If you wanted to take a long, position out there, Victor, I would be taking a look at CLNE. Looks like the storm hit Victor. He signal dropped, and he's not on the line anymore. So I hope that helps you out. Let's go take a look at peek in on the King out here, because if we take a look at the currency market, I mentioned that the euro was trading down. So let's go take a look at King dollar. The U.S. dollar index trading out at about a little over $80. King dollar down and over the descending trend line out there. It looks like getting over with conviction. The King off of the bottom. That ought to put a little bit of pullback into gold, silver, light sweet crude. Right now, light sweet crude is up 38 ticks. Gold back 12. Silver down 46 cents. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 17 points right now. Composite down 1. S&P's off 60 cents. Small caps down 12 pennies. Google up $3. Apple up $4.65. Trading out at $4.59.22. Microsoft back 4 ticks. Intel off 9. Cisco up a penny. Leading the charge to the upside, you've got O'Reilly Automotive. ORLY is the ticker symbol. They're up $9.91. But by your nose, you got AutoZone just creeped in front of them. AZO. So you've got the two auto and Advanced Auto Parts just behind them. Those are the kings in the house. Let's take a look at O'Reilly Automotive here. Earnings per share of $1.30 versus $1.34. They did revenue 6.6 versus 6.7 billion. Their store comps rose by about 2%. So they're doing nicely here this morning. Let's take a look at AutoZone's results here. AutoZone in the actually, you got O'Reilly Automotive's up 10%. So percentage-wise, they are the leaders. Looks like O'Reilly Automotive is buoying the ship because I don't see any results here on AutoZone. Let's try Advanced Auto Parts. AAP is the ticker symbol. They did $65 million versus $66 million in net income. Sales $1.3 billion versus $1.3. So in line there, earnings per share 88 cents versus 90. Looks like it is O'Reilly Automotive that is truly lifting the tide there in those. And those, we'll go take a look at those in just a moment. Leading things to the downside, you've got Akamai Technology. They're off $7 and change. That's down 18%. So they're getting the kibosh. Then you've got the Bungie jump that's going on. Bunge Limited, BG is the ticker symbol. They're down 7% right now. That's off almost $6. Green Mountain Coffee Roasters getting roasted this morning, down 7% off $3.44. Teradata Corp, TDC off $3.90. Scripps Network, SNI off $3 and change. Our call number again, 877-927-6648. Before we go take a look at some of those equities, though, let's go back to clean energy. Because as I take a look at this stock chart here, not a bad setup. So let's actually go see if the reward to risk is in it. And if you're watching along on Tiger TV, as Victor had called from New Jersey, he was taking a look at this one equity. So number one, what we know is that it has pulled back to a breakout area. The breakout area being the January 2nd gap up, just like the market. This stock also gapped up. Did it with 2.61 million shares. Move back into that December 31st area. Now, December 31st is also a bullish engulfing candle. So what we know then from this setup right here is that support is going to be 1198 or a close below 1198. Now, as this equity here pulled back, what we can see during the pullback came back towards that towards the lower end of the relative weakness indicator, relative strength indicator. So moving into the oversold territory. And what it also did, if you take a look at these small numbers on my screen here, made a TD combo 13 count. Those often are also reversal areas. So really everything comes together. In fact, if you go over to the left side of the chart here, what you will see is Clean Energy, CLNE, off the bottom with conviction on November 13, 2012, 4.7 million shares. So other than the mere fact that it is traveling underneath that 9-period EMA, looks like a pretty good setup. And you'll have some confirmation today with a higher close over this bullish engulfing that took place yesterday. Now, let's go take a look at, and this is what you should be doing on any equity that you purchase. You should be identifying the reward to risk, and you should be identifying the position size. Now, there's a great tool on the homepage at tfnn.com. So after you've downloaded my free special report, reading the message of the markets, if you go down a little further on the left-hand side of the page, you will see the power of position sizing. I'm going to go ahead and pull up the position size calculator right now. That way everybody watching in on Tiger TV or inside the den, you can follow along. So what we know here is we're dealing with clean energy. CLNE is the ticker symbol. So that's the first thing that you type in, and then you go ahead and you hit the search button. When you hit the search button, it goes and checks out all the data, takes a look at the last 10 days worth of information. Down here at the bottom are all the calculations, and what it's doing, it's giving you the range. And what I like to do is take a look at the last 2 weeks, the last 10 days worth of trading. And the average true range here on this equity is 33 cents. So your stop would need to be at least 33 cents wide just to stay out of the normal daily noise. But what I like to do is I like to use a wider stop than that. This is a stock. There's a couple of pull-down windows. And what these windows are used for is really to determine an allocation of your total trading capital versus your portfolio on this on an equity. We're taking a look at going long. I'm going to go ahead and put in increments of $10,000, but you would put in your free trading capital. Your free trading capital, the risk taken doesn't need to be any more than 1%. Now, I'm going to switch back to the stock chart here real quickly, because now we're going to take a look at, let's say you entered right about now, so $12.55. But what you also want to have is you want to have your target. So what would be your target? So you'd have a couple of targets. Number one, you could use that 200-period EMA, which right now is about $13.72. So that would be one target. Another target area would just really be the swing point, the most recent swing point. Well, if you take a look at that swing point, you'd go back to January 14th. You would take a look at the high. 1437 is the high. The low, 1380. So you're dealing with 1380, 1372, maybe as high as 1437. That would be the range of the target that you would be looking at. So let's just be conservative here. Let's use the smaller of those three. But you can use either. You can use any of them. I can't control where price goes, most certainly. But what we can do is we can control our trade setup. So now let's come back. We're going to say we're going to enter this equity right around now, $12.55. And we're going to use as that target here, $13.80. We go ahead and hit this calculate button. What it does is it tells us that by using 1% of our capital, And using these parameters here, then it would take up 24% of our total available in our portfolio. And so we don't need to risk 1% because on an individual stock, from a weighting standpoint, I don't think that you should have more than 10% of your total capital in any one stock. Now, you use this as a guideline, whether it's 10 or it's 11, but certainly you don't want to have 24% of your trading capital in any one stock. So you can come back up here. You can change the 1% to 0.5%, or you can just, in your mind, do the calculations. Now, what this told us here is this told us if we use those parameters that you would be taking a look at a reward to risk of 2.34 to 1. And you have to determine whether or not that is an acceptable risk level for you. If it is, great. Now, what you can also do, and we'll do that right now, we're going to come back here. We're going to change that 1% to 0.5, a 0.5% risk out here. And you can see here from a stop standpoint, what this also did, this also gave us a stop. It multiplied our 33 cents times 1.618, gave us a 53-cent stop. And this also told us everything we needed right up here if we were going to take the trade. It told us where we were going to enter, 12.55. Told us what our hard stop was. That means you put it in after you get your position. This also tells you how many shares you would buy. Now remember, 1% here would allocate 24% of our portfolio. We wouldn't do that. We wouldn't take 187 shares. What we would do is we'd probably take like 90 or 100. And again, this is a guideline, so you want to just, use some type of even number, not buy 100. Well, you can do what you want, but I would just I use this more as a guideline around. Now, we've changed the risk down to a 0.5%, and let's use the aggressive area. So we're saying that, look, your first target on this equity would be the 14, or the high would be 1432. It would be that swing point. It would be a 100% move of a move. That would be why where you would be looking to exit the trade. And when you place the trade, I'd have you place everything. I would have you place your stop and your exit. You always want to have an exit plan. And that means on both sides of the trade. Now we hit the calculate button here. You can see it's 12%. That makes sense. Now we can take a look at our risk reward. So now if this hits the upper end of that swing point, you'd be looking at a 3.3 to 1 reward to risk. Not too bad. So it looks to me like with regard to the signals that we've received on clean, as we've taken a look at the support that we have out here, this looks like a pretty darn good trade. You want to make sure that you've got the market moving in the same direction, but this looks like a good trade. This is what we would teach you to look for as a market pulls back, as a equity pulls back into a breakout area. So this says you could enter at 12.55. Says your stop should be $12.02. And we're going to go back to the chart. We're going to see where $12.02 is, see if that also is logical. It says about 90 shares, 100 shares. And your exit, you'd be putting in 1432. Now, would you put in 1432 the very top of the candle? No. You'd use something underneath that. So you'd use something in between the 1380 to 1432 would be your exit. And you would have that in. Now, as the equity would be moving up, let's assume it was moving up, you can go back in and you can adjust your stops. In fact, you should manage your assets. You should manage your money. Now, as we come back to the equity here, remember the stop on this. Well, actually, I don't remember the stop on this, so excuse me. I thought I wrote that down. I did. I just can't read my writing. So the stop on this is $12.02. So 12.02. Let's go see what the swing point of this bullish engulfing was. The low is 11.98. So would you put your stop at 12.02 or would you put your stop underneath 11.98? Exactly. You would put it underneath 11.98. So maybe 11.95, something along those lines out here. So this is how you want to set up every trade that you do. We've got all the tools for you here at TFNN. And if you want some other tools, which you really should have, you should learn how to use the candlesticks. You should learn how to use the relative strength / relative weakness indicator, because you want to be buying an equity when it is coming from the bottom. You don't want to be chasing something when it's up towards the top where you'd see reversal. If you just take a look, and then what you also want to do on any chart is you want to see, is there some consistent patterns? How does an equity resolve itself? We can see here as this equity moved down and got into the extreme oversold territory, what did it do? It bounced and it moved higher, and we can see where it stopped. Where's the patterns where this stopped? You can take a look at this equity each time that it moves down into these levels here. In fact, you had a real nice signal to go ahead and take a trade on this. This is one of the things that I will be teaching. In fact, it's available even in the videos, the newsletter that I've got, Reading the Message of the Markets, something different. It's not just reading some text, because I know that education and learning is all visual out there. So it comes with videos. I put together 3 additional videos that we're going to be sending out to folks. One video is on Apple, how you could have called the top. Another was on the euro, a great trade in the euro out there, and the divergences. Another one was, I can't remember the third one, but there's a fourth one that I'll put together as well. So go to the homepage at tfnn.com and do it now. You always have to take action, and massive action. Unless you're driving, don't do it. But go do it now and sign up. The report's free. The only cost, folks, is the cost of not taking action out there. So that was on clean energy. That was the whole setup out there. I know Rick in British Columbia was also taking a look at CLNE out there. So let's go take a look at some of these stocks here that are popping and dropping in the market. Let's go take a look at the leader in the clubhouse, and that's going to be AutoZone, AZO. Then we're going to go take a look at O'Reilly Automotive as well, because that's up a nice 9% out there. But as we take a look at AutoZone, gapping up this morning. Now, as you take a look at this equity, we can see the resistance line of AutoZone. That is the red horizontal line going across my screen. You want to be able to do this and place this on all of your charts as well. So AutoZone looks to me, it's gapped up this morning. It's taking out a swing point. The most recent swing point here is the February 1st level, 376.16, 667,000 shares that day. Let's see what it's done so far. In 17 minutes of trading, 295,000 shares. So it's got the volume, most certainly, to take out that swing point. What is it going into? Just simply go over to your left, see what candle it's going into. This little downdraft here where it ran into some resistance on December 4th. That had 1 million shares. So it looks like it should have enough to take on that level. That high is 384.25. But this actually, now take a look at this equity here. And even though, it's popping up on some, some nice earnings results, what we do know about this equity is we know that it has a resistance area. And if we take a look at that resistance area, just simply go back and take a look at the candle here on November 27th, that high at 390. And you use 390-ish. You're not looking for the exact number. The exact number is 390.11. But as this equity moves up towards that level, which it should do based on today's volume, which it should do with the gap that's out there, but take a look at that RSI indicator at the bottom. You can see as this equity moves up to that level, it ought to start achieving the overbought territory. Now, with this in a trading range, which is in the 391 level, down to about 348 or so, 348 may not be a bad trading range for a short setup. So we can go back to that same calculator that we used, and we can do the short side of the trade out there. So anybody want to do that? Anybody up for taking a look at a possible short side on AZO? I'll tell you what. We'll do that. We'll do that when we get back from the break. We're not going to a break here for about a minute or so. So let's go take a look at O'Reilly Automotive, and we're going to see which one may have the better of the short candidates, if any of them. But we'll go ahead and take a look at them. So we're going to go take a look at O'Reilly Automotive, O-R-L-Y. I know that O'Reilly Automotive had a big gap down day at one point in time in the past. Oh, there it is right here back in June of 2012. Well, this thing is really popping up here nicely today. Let's take a look at the volume, though. Volume so far, 924,000 shares. And let's go see what this is going into. We're going to see what this is going into just simply by going over the swing point that it's moving towards, and that is the swing point here from June 19th. June 19th is the area, in essence, where it really began its breakdown. Now, volume there, 1.3 million shares. So today, this should have a pretty good volume to it. In fact, it's already got 900,000 shares. Should be able to test that out. Looks to me like O'Reilly Automotive is going to come all the way back to its highs, which are May 2nd, 2012, in the 107 to 105 area. 877-927-6648. Dow's off 25. Composite down 59 cents. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow off 53 points right now. Composite down about 7. S&P's off 3. Small caps off $1.23. And before we go take a look at that AutoZone trade, or I think it was AutoZone was one we were looking at. Let's take a look at checking on Federal Express. FDX is the ticker symbol here, trading out at 106.47. Now, I've got a weekly chart up on my screen, so the first thing I want to take a look at is the swing point here. The swing point that I would be looking at is, looks like the swing point high of February 18th, 2011, 98.52. Make sure that's the right number. That is the number, 98.52. And the volume there was 10 million shares. It's up and over that swing point. And let me make sure I can come down here. So let's go ahead and we're going to draw along the bottom of the chart here. We're just simply going to draw a line so we can see, as Federal Express on a weekly chart, you can see it's up and over the swing point on lighter volume. So not the type of conviction, a beautiful-looking move out here, most certainly. Let's go ahead and put a couple other things out here real quickly on the charts as we take a look at it. And you can see on the weekly chart getting up into that overbought condition. However, no bears have shown up in this equity. So as we take a look at what it's going into next here, it's going into the swing point. Let me pull this back further. Looks like where this wants to rise to is, now if we go to the all-time swing point high out here, we would be looking at March 2nd, 2007. I think that is what I would then use as my benchmark. The bottom of that swing point is March 2nd is 111.29. It's at 106.41. And let's also go ahead and put the volume. Let's see what kind of volume was down there. Only 10 million shares, 10.6 million shares on that. So if we take a look at the last couple of weeks, it's been about 10, 11 million shares. This week so far, 10 million shares. That is where Federal Express, FDX, looks to be headed to on the weekly chart out there. Let's go back and take a look at the at how you would utilize the position size calculator, how you might use, let's say we're going to take a look at AutoZone because we have clearly defined resistance areas. So we're going to go ahead, and those resistance areas on AutoZone are in about the 390 level out there. And the first target in a consolidation pattern, if we take a look at the consolidation, what I'd use, again, the same thing, use the most conservative approach. The most conservative approach here would be May 23rd's low. I say at about the 355 level. So let's go ahead. We're going to put the position size calculator to show you that this thing here works on both sides of the trade. Again, we do the same thing. The instrument symbol AZO is what we go ahead and punch in there. You hit the old search button. It'll go ahead and pull up the stock. We know that this equity here has got an average true range of $6.55. Now, this retained what I had there before, which was 0.5%. I'm going to switch this back to 1%. It's a stock, but instead of being bullish and long, we're going to be bearish and short. So our entry price, we're going to say, is right around the 390 level. I'll just put in 390. And we're going to say our exit price here at the 355 level, not 3,500, 355. And we'll hit the calculate button, and let's see what kind of results. Now, 1% is not what you would need. 1%, if you were to take this trade, would take up 37% of your trading capital. So your risk only needs to be 0.33. You just simply come back up here, hit 0.33. You would go ahead, hit the calculate button again. It's about 12%. Again, we're using this just as a guideline, just like Jack Sparrow in, what was that movie, Pirates of the Caribbean, because you're going to be a pirate. You can see your reward to risk on this trade, 3.3 to 1. Gives you everything you need. Your entry point, which is about 390, your hard stop at 400.6, which is a $10 stop on this, your exit price 355 on the short side of the trade. Go over to the homepage of TFNN.com, folks. Sign up. Use this tool here. You can use it for free. It's available to you, just like my special report, Reading the Message of the Markets. Folks, have a great day. Maybe we'll see you in just a few. Remember this, folks, you have an amazing power within yourself, and that power is so strong, it'll create a life of abundance. But mostly, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great day. Great moments are born from great opportunity, and that's what you have here. The opportunity to answer the questions, should I buy or should I sell? Should I be in or should I be out? Hi, I'm Steve Rhodes with TFNN, and I produced a free report, Reading the Message of the Markets, where I'll teach you how to use a set of tools that will answer these questions. Go to the homepage of TFNN.com right now and download Reading the Message of the Markets. This free special report includes step-by-step video examples that would have had you out of the market before the crash of 1929, before the crash of 1987, and would have had you back in the markets buying at the bottoms. This set of tools works on all time frames and all instruments. This set of tools will shape your trading and investing future. Folks, this moment will never be here again. The only cost is not taking action. You were born to be a money master, and the time is now. Go to the homepage of TFNN.com and order Reading the Message of the Markets.